Hey guys, welcome back to another episode of Mad Money. So, you guys really like the Warren Buffett breakdown that I did. This isn't going to be nearly as big. It's about a tenth of the size as Warren Buffett's, but it's still going to be entertaining. It's Carl Icahn, and so we can kind of walk through the Icahn Enterprises piece of the business relatively quickly, and then we'll progress to his personal investments, which is where I want to spend, I would say 90 to 95% of the time. So really quickly, what I want to talk about with Icahn Enterprises, it's where about Icahn holds about 92% of his wealth. So I think that is, or no, sorry, he owns about 92% of Icahn Enterprises, not where 92% of his wealth is. But he owns 92% of Icahn Enterprises, and it's basically just a company made up of small investments, energy, automotive, food packaging, metals, real estate, and home fashion. And so you won't see a lot of the companies that I'm going to highlight here on this investor presentation. Just this one slide, I promise. Uh, in his personal investments, actually, you might see one of them, but that's basically where he's getting a decent amount of income to then take out of the partnership because Icahn Enterprise is a master limited partnership. He's paying his taxes on that, and then he's investing it outside of his Icahn Enterprises to basically have his own personal investment portfolio outside. And so we'll kind of get to that in a second. But in terms of energy, you have CVR Energy, which is a refiner slash fertilizer company. You have the automotive aspect of things, which is Amco, Pep Boys, if any of you guys live in the northeastern part of the US, and even some bits in the southern US have Pep Boys as well. You have your food processor. Not really too sure what this is, but I think it's metals or materials company here. And you have real estate, which apparently is a pretty large portion of Icahn Enterprises. And you have West Point Home, which is kind of the furnishings aspect of the business. So these are really the key growth engines within Icahn Enterprises. And then he has some other parts here where he actually talks about in this investor report here the actual holdings within. So you can see there's a little bit of HP, Chenier, things like that. But he also holds a decent amount of this outside of his Icahn Enterprises company, and that's kind of what I really want to talk about now. Is he does have some of these here, but a lot of his personal investments and a lot of his investments are really held outside of Icahn Enterprises. So let's just hop right into it after the intro. All right, guys, so welcome back. So, really briefly, you can see here that the income is coming from really only 4 or 5 different sectors. So, you have industrials, a little bit of energy, some consumer staples, some information technology, and that's relatively it. You can see that there's not too much of a difference in terms of capital allocation. You have the consumer discretionary staples, energy, industrials. Then you also have the information technology and materials here. And so, yeah, nothing too crazy. Not all of these sectors are filled. So one of the key things that I wanted to highlight was you don't see any real estate in the personal portfolio. That's probably because it's underneath Icahn Enterprises. You don't see financials in the portfolio or healthcare or any telecommunications or utilities, which I thought was pretty interesting considering about 50% of what Warren Buffett has invested in is financials, and you don't see any of it within Icahn's portfolio. Thought that was pretty interesting. And another thing to note is I don't think he has any of the financial investments or anything like that within Icahn Enterprises as well. So you see that he owns about 92% of Icahn Enterprises, which we'll get into in a second. But I don't think there's any financial stocks or financial investments underneath that either. So I know for a fact he has some real estate underneath Icahn Enterprises, which we kind of touched a second about. But yeah, I mean, it's pretty interesting. $19 billion portfolio at the moment. Keep in mind that this is the current value of the portfolio, so we'll talk a little bit about the cost basis, which I have as well. And he's getting about $2 billion worth of income coming from this portfolio on a yearly basis, so about $165 million every single month, which is kind of cool. And then actually looking at the dividend income, so he's not really making too much So you can see there's big price swings here. So this actually is offset by one. So this really should be a large price pay or swing in January, April, July, and October timeframe. So the first month of every quarter, which is interesting. But what we actually end up seeing here is that, and really no payments in the second and third month of every quarter, which I thought was pretty interesting as well. I think a lot of this has to do with the payments coming from Icahn Enterprises, and we'll talk about that as well. So he owns about 92% of that, and it's a pretty big dividend payer. And so, yeah, I think we might as well just hop into what actual stocks make that up. Just right after we give a quick overview in the companies that he does have. So 14% of the money that is coming from the portfolio is around energy companies. Consumer staples hold about 8% of the value of the portfolio, and about 5% of it comes from consumer discretionary as well. Industrials, which is mostly his investments in Icahn Enterprises, is around 62% of the portfolio. And then he has about 10 to 11% in information technology, with a small remainder being in materials. Not all these companies pay dividends, so Industrials holds up the cake by paying about 80% of the dividends in the portfolio, 15% of which is coming from energy, and a little bit coming from consumer staples as well. Only 3% is coming from information technology. So actually going to the companies that he's paying here, you can see I have ticker on the very top, name, what account it is. So I just made it all one account. What price it is currently, what price he paid per share based off the 13F that he's filed in 4Q. How many shares he has, the ownership percentage of the company, the cost basis, the current value, and the gain percentage, as well as the amount gained that he has, yield on cost, dividend, and the expected annual payout. So you can see not all these have annual payouts, which is kind of interesting. I would anticipate a little bit more, but I guess because he's getting so much of his money coming from Icahn Enterprises, yeah, I mean, I guess he's just going to take that and put it into potentially high growth companies. So Icahn as a investor is generally an activist investor, so he tries to generally get seats on the board and change directions of the company to increase value for him and the rest of the shareholders. So he's a little bit different than Warren Buffett with respect to the fact that Warren Buffett will just not really try to take over a company. There are some companies where he tries to have a larger stake within the business, but he doesn't necessarily become an activist investor really trying to change the board. I think he generally just tries to find good companies at good prices and let them keep doing their thing and invest more on fundamentals. Rather than trying to actively invest and try to actively shake up the board, if that makes any sense there. So going into the actual portfolio itself, a lot of the about almost half of the money is in Icahn Enterprises, so about 10 billion, almost 11 billion in terms of current value, with the cost basis being about $12 billion or so. So that being said, with the price at the moment, we're down at about $1.5 billion, but that's okay because it pays about $1.5 billion in annual dividends coming from this company. He owns about 92% of Icahn Enterprises, um, so that's pretty wild. I mean, it's a pretty big piece of business that he also owns outside of his investment within Icahn Enterprises, some additional shares in CVR Energy. So he owns about 70% of the company, and just under about $1.5 billion worth of the company. He's currently down just as much almost, and the company pays a yield on cost of about 7% or almost 8% based off of what he purchased it at. But he's down almost 50% on this, and the dividend yield at the moment, just based off what the company's price is, around 15%. Pays about $220 million or so in dividends on a quarterly basis here. Then he has a Herbalife position. I think some of you guys may know this is already. He's about 20% or almost 25% of Herbalife. Brought it about at 47, so he's down pretty heavily on this position just based off what it says in the 13F. Doesn't pay a dividend. Current market value is just under $1 billion. He owns almost a quarter of it, and yeah, I mean, he's almost down $700 million on this thing. Pretty crazy in that respect. He did take a big stake in Caesars Entertainment. They used to pay a dividend. I don't believe they pay a dividend anymore. unless the spreadsheet is pulling up incorrectly. He owns about 16-17% of the company. He's down about 40% on this one as well. Currently just under $1 billion worth in the position here. Yeah, just under 40% down, almost $600,000 down. $600 million down rather. And this one, LNG is the ownership or the holding company of Cheniere Energy, and they own Cheniere Energy Partners and a bunch of other smaller companies that are partnerships as well. This one doesn't actually pay a dividend at the moment, and it's been relatively a good investment up until rather recently, when the Henry Hub gas prices have kind of dropped out of the sky. Down about 42% on this one. He purchased in about 61. Currently, the price is around 35. Has a decent amount of shares, owns about 7% of the company, just under $1.2 billion in terms of cost basis, and just under $700 million in terms of what the value of the company is at the moment. I personally own CQP, which is Cheniere Energy Partners, which is actually paying a dividend or paying a capital distribution from the LNG part of the business. This, I don't necessarily know why they don't necessarily pay a dividend or distribution out of LNG, but I think it might just be because it's the holding company, and it's really trying to direct, I guess, where the debt is within the organization. I still don't necessarily understand why there's 2 or 3 different layers, but sometimes when you have master limited partnerships, sometimes these things get a little bit more complex. And I remember Kinder Morgan back in the day, you had KMR, you had KMI, you had KMC. I mean, it was a very interesting mess that some of these master limited partnerships set up sometimes. Then you have HP, which is the technology aspect of the business. He put about $1.3 billion into the company. He's only down about 16% because he has a cost basis of around $20.55 for each individual position. He only owns about 4% of the company, which I thought was pretty interesting. Rather low compared to a lot of his other investments here. But this one actually pays a dividend as well. It pays about $44 million a year. So little small, but that's also because he only owns about 4% of the business. That being said, it's a relatively good company. I think this is a good long-term hold. Personally, I don't own it, but I know that he's been a big advocate for it as well. And speaking of big advocates, I know that he has been a huge advocate of our next pick, which is Oxy. And I apologize up front because the dividend has not been updated in this sheet here. It basically is waiting for NASDAQ to update its website, and so then it will actually be able to update officially. So that's kind of one of the bonuses or negatives of this sheet here compared to iCloud. iCloud, it basically updates within a day or two. This one waits until NASDAQ actually officially updates their website. So it is what it is. So this at the moment is showing about a 22% dividend yield. I think everyone knows for a fact now that it is not true. I think they cut their dividend by 87 or 90% over the past week or so. You can see he's down a pretty good chunk in this position, bought in about $41 right before they did the merger. Price is currently down to about $14, so he's down about 65% or $600 million on this position. This is basically going to go away in terms of the annual income, or at least decrease to below $10 million a year. But that's okay because in the grand scheme of things, it wasn't a very large chunk of his dividend income anyway. So yeah, that's really it. Then you have New Oil Brands. I don't know too much about this one, so I won't get too much details about it. But he's down about 34% on this one as well. Purchased in about just over $19 a share. It's currently sitting at just under $13 a share. Owns just under 10% of the company and is down almost $250 million on this one. Gets a pretty good dividend from this one though. Dividend yield on cost is around 4.5% to 5%, and he's currently getting just over 7% at the moment based off the current low price environment that we're seeing throughout the entire market. Then you have a Xerox company that everyone I think knows what Xerox does. They basically make copiers and other digital products for some people to use. Purchased it at about $37 a share, currently down to about $24 a share, down about 35%, which is pretty common based off of what we're seeing in the rest of the market. Down basically $300 million or so. And it pays a pretty small dividend. At the moment, it's paying upwards of about 4%, but based off the yield on cost, it's getting about 2.5% to 3%. which is good for about $24 million a year or so. Then you have Hertz Global. These guys rent out cars for folks. This one's hurting pretty bad. It's almost down 50%. I know he's been a pretty big activist in trying to get Hertz to change up their things and streamline their business a little bit. And so it's obviously taking a toll. He owns about 31% of the business, but he's down about $330 million or 50% on the purchase as a whole. He has Cloudera, which I'm not exactly too sure, but I think they are a cloud company. Obviously, it says it in the name there, but I'm not too sure what differs them from, say, Amazon Web Services or Office 365 or some of these other companies that are offering cloud services as well. Burst at just under $12 a share. Currently it's sitting at just under $7.50 a share. Owns about 20% of the business, and he's currently sitting at about a $227 million loss. Does not pay a dividend. Then you have Navistar, which I believe is a trucking company, and if it's not the trucking company, it's the truck engine making company. And so he's sitting almost on even at this one. I guess is better than most of his positions. Just under 10% loss here, and only a $45 million loss compared to the rest of his company. This one does not pay a dividend either, but he owns just under 17% of that company. Freeport-McMoRan is a mining company that he owns some capital in, or put some capital in. About $13 a share is what he purchased it at. It's currently at 7.5, so down about 42% or so, or just under $150 million. Freeport-McMoRan recently cut their dividend, or have been cutting their dividend over the past couple of years, just based off of being debt-ridden company here, but they still pay a small dividend here. He only owns about 1.8% of the company here, but he still gets about a $5 million paycheck every single year from the company at the moment, which is pretty good. Conduent is something I have no idea about, so I'm basically just going to skip over this one, but he's down about 67%, or about $150 million on this one. Does not pay a dividend. You have Manitowoc Company, Hertz Holdings. I'm not too sure what these guys do, but he's down around 50% associated with these guys as well. You have Manitowoc Company, which is a food services company. He's down about 33% on this one as well. He owns about 28% of this business, almost down $50 million or so. Then you have Tenneco Company, not sure about this one either. Purchased at about $13 a share, currently sitting at around $5.50 a share. For just under a 70% loss, or just under $42 million lost. And yeah, don't skip ahead to this very large number at the very bottom here, because otherwise you might be scared. But Sandridge Energy is a shale gas company, mostly gas, but they do produce a little bit of oil in the United States as well. And he purchased them at about $4.24, and they're currently priced at just over $1. He owns about 13% of this company. It was a $20 million investment, and it is currently down to about $5 million, so he's lost about 75% of the company's value, or about $15 million at the moment. And if you were to take all these losses, and I'm sure some of these are rather recent, and some of these are sometimes just because the fact that they've been somewhat shrinking businesses, he's currently down just over $7 billion, or 26% or so in the portfolio, just under 27% in the portfolio. The cost basis of everything was around $26 billion, currently sitting around $19 billion. But like we mentioned earlier, he's making about $2 billion or so from dividends from this, and most of this is coming from his Icahn Enterprises holdings here. So I think what he's doing is just taking his Icahn Enterprises money, paying his taxes on that on a yearly basis, and then investing it in some of these other potentially high risk, high reward businesses here. But I know he's been in some heated arguments with respect to his investments in Herbalife and Hertz. Obviously, he's been in a lot of confrontations with Oxy at the moment based off of the investment with Warren Buffett and the preferred shares that he gets. So, of course, I'm sure Carl is upset because Warren obviously still gets his preferred dividends coming from those preferred shares, but the rest of the shareholders at the moment basically just got their payment reduced by 87 to 90%, whereas Warren is still going to be getting his $800 million check every single year. So pretty wild with respect to that. And have seen him talk a little bit about some of these other companies, but I obviously know him most from his investments in Icahn Enterprises. I used to own Icahn Enterprises. I recently sold out of it just based off the fact that I purchased it at around $90 a share or so, and I kept reinvesting the dividends. And you can see the dividends in this company are relatively good, especially at the current price point, about $55, $56 or so. You can get around a 14% dividend, or about $2 every single quarter. So in that respect, if you believe that the company is going to be able to continue to distribute dividends, it might be something worthwhile to look at. That being said, a lot of the company has been having a negative net income over the past year or two. And so, in that respect, I was afraid that the distribution may get cut. Granted, I know that there's going to be a willingness to keep letting the company go into debt so that Icahn can continue to collect dividends, considering he owns about 92% of the company. And therefore, he owns basically everything compared to the board and everything like that, because he is the chairman of the board. And so I think what he might actually do is continue to collect his dividends while the rest of the organization is really struggling. So that way he can continue to invest his money into other companies as well. But hey, that's just me. So my thought was, well, it was nice to be invested with Carl Icahn. At the same time, I don't necessarily understand if the company had my best interest at heart or not. And to be honest, it was sitting in two different accounts, and I wasn't getting a really tax efficient investment, because it is a master limited partnership. And so granted, while it might be, let's say, a 14 or 15% dividend, I really was only walking away with a little bit over 8 or 9% based off of my tax bracket at the moment. And so, not that that's anything to scoff at, but I thought it might as well just be something that I take that money and invest it elsewhere for the time being. So don't remember exactly what I invested in, but I had about 15 shares in one account and about 10 shares in another. And so I took that money and invested it elsewhere. And so it is what it is. But really fun investor to watch. I really enjoy watching Icahn invest and seeing his upfrontness. He's an interesting guy. For those of you guys that don't know him, feel free to check him out on Google. But that being said, I mean, at the moment you can see just how drastic the dividend yield has gone up based off of his yield on cost. So his yield on cost for some of these investments is around 7.5% or so. Keep in mind that this is heavily skewed by Icahn Enterprises and this large industrial wedge here being a huge percentage of this. And that being said, a lot of these companies that he's investing in don't even pay a dividend. So you can see industrials is highly skewing this to the 13% range in terms of yield. Then you have consumer staples, which is barely giving anything. Energy, this is going to be reset once Oxy kind of comes into play. And yeah, you have some other companies that barely pay any dividends, if at all, and some of the other sectors that he has money in. So that being said, I mean, just because the portfolio is decreased in value, he's up around 10%, almost 10.5% in terms of dividend yield, and that's kind of scary for me. I probably would try to diversify into some other companies that didn't necessarily rely on dividends if that were me. But hey, I mean, if that's what he wants, he's able to just get his money out. He's a billionaire. I'm not, so I'm not going to judge him. He's obviously done his due diligence and good work in the past. And so if he just wants to live off the fruit of his labors and take his money as dividends, so be it. So yeah, a little bit less interesting than Warren Buffett's portfolio here, but I hope you guys still enjoyed the video. And if you guys have any suggestions about what ones you wanted me to check out next, whether it's Ray Dalio, whether it's anybody else that you're curious about what their portfolio looks like, or their 13F, let me know down in the comments section down below. More than happy to do that for you guys. And yeah, I think that's it. I'll see you guys in the next video. Cheers.